Good morning, everybody. Good morning. Good morning. Good. Awesome. All those out there watching on Facebook, YouTube, and our streaming service, thank you for being here. We're a little bit late starting, but you're going to get a good teaching today and some really great information that's going to help all of us. All the way hailing from Washington, D.C., which is far away, is Ms. Tina Del Casale. Ms. Tina Del Casale, our friends, we've worked together a lot. As you know, I do real estate, and she's done a lot of deals with me with people for mortgages and loans, helping them prepare how to get ready for it and all that good stuff. So as you know, this is our series that we do once a month on BLESS, standing for Building Lasting Economic Solution Strategies for Every Disciple. So it's BLESSed. And so every month we focus on something. So the last month we focused with Lady Deborah Love, and she talked about how to get rid of debt and how to save strategies, which is really great. So today we're going to have Ms. Tina. She's going to talk to us about how to make sure we take charge of our credit so it can put us in a position to get acquisitions for wealth building, all the good stuff that we need to. How many know our credit tells us how good we are with money and where we can work on it? We all have hiccups, we all have things, but we can work through it and get better. So she's going to share that with you. She's got a long history. She looks like she's 20, I think, but she's been around a little bit. Amen. Awesome. No, Tina and I have been friends a long time. She's a great lady, great friend, and she loves helping people. So give a warm welcome to Ms. Tina Del Casale from Sandy Spring Bank.
Thank you, Pastor. Now, thank you so much for having me here, too. I greatly appreciate it. And let me know if I'm speaking too loudly, because I don't often need a mic. I have pretty good projection, but because we're streaming, I will speak into the mic. So I have been lending for 34 years, and credit has changed a lot over that time. For those of you who remember, there was an era when we didn't have credit scores. So I want to talk about what credit is first, and then talk about how do we use it to our advantage instead of it taking advantage of us, okay? So it may seem like a simple concept, but credit is someone else willing to give you money to buy something that you don't have enough cash for to pay for at one time. And this became something that instead of just being your friend or your neighbor lending you money who knew you, in order for a stranger to lend you money, you had to prove your ability to repay. So before credit scores, when a human being would look at your credit, if you had one 30-day late, they were like, oh, you're a risk. I can't lend to you, okay? Because a human being was looking at the reports. The eras have changed. Numbers came in. We're now a number, okay? And when computers came into the industry, computers were able to, with fancy formulas that are way above my pay grade, figure out if your risk was worthwhile, even if you had had lates in the past, if you had had collections, okay? So I wanted to just start briefly with the concept of credit. And when I am talking to people that have had some issues in the past, that we've had some things to work out, one of the first things I try and get them through is when someone denies you credit, it is not personal, it is a business decision. And I want you to think of it the same way. If you were gonna lend a friend money, but everybody who had lent money to that person in the past never got paid back, what is the likelihood you would dip into your personal pocket and hand them money? Because you might as well consider it a gift, because the odds of you getting it back are slim and none, right? So that's why I want people to understand that credit is so important of a tool. And if you need me to hold still and not walk around, please tell me that. All right, so when you recognize that I'm not giving you money as a gift, I do expect repayment, you can understand a little bit better why your past history becomes so important in how you manage it, right? Okay, so taking charge of your credit. One of the first things I usually always get asked is, well, I get a credit score with my credit card, I belong to Credit Karma, or Chime, or one of the many services that provide a credit score. And I want to apply for a mortgage, but when you pulled my credit, it was a very different number than what Credit Karma told me. Now, you can be 100 points higher, 100 points lower than what you see from those online services. And the reason being is the scoring model, okay? There are 5 scoring models that different services use. When you go to buy a car, it's one scoring model. When you apply for a credit card, it's another scoring model. When you apply for a home, that's the toughest scoring model. We use the FICO 2, 4, and 5 models. Now, what this basically means is that it's an audited report. It is usually pulling from all 3 bureaus. So if only one bureau is reporting something negative, we will still report that into the scoring model versus the other 2 bureaus didn't have it. So they're scrubbing everything out. They're taking out and they're putting in the worst things of the 3 bureaus to determine the scores. Now, each bureau, TransUnion, Equifax, and Experian, has their own scoring model. They all get reported to differently, and they all have different reporting dates. So a lot of people are like, well, I don't understand why each bureau is so different on the score. That is because Equifax may get the report at the beginning of the month from your creditor. TransUnion may get it mid-month. Experian may get it the week after that. And they're always about 30 days behind. So they're getting your past balances. And as you may realize, when you pay something off, it sure takes 30 to 60 days to show up. But if you go out tomorrow and buy a car, a big screen TV, it is on there within like 10 minutes. It's amazing how, the purchases go on really quickly, but when you're paying that balance off, it takes its sweet time to be reported. So the scoring model is really important to recognize. And what I tell people is it's still good to have monitoring systems, to pay attention to what your score is when it's coming through the credit report, when it's coming through your credit card statement, because it's an indicator of up or down. So if it's going down on that, it's going down on our score model as well. So understanding the difference between the scoring models helps you understand why you'll see, oh, no, I'm a 750, and we pull it in, maybe you're 680, and where the difference comes from. So letting a lender, even if you're a year away from trying to do a major purchase, letting a lender look at your full score models is definitely worth it. And I am big on questions, so if there are any questions as we're going through, please feel free. Okay. All right, what goes into your credit score? It is the length of time you have cards these days. So again, back before credit scores, the old adage was, oh, pay off your credit card and close that account. Now, we want you to keep everything open, because one of the big factors is that you have the credit, but you're not using it. You're not maxing out your credit card every day, every month on every card. And what they see when you're doing that is that you don't have control, or you do not have the income to support your expenses if you're maxing out every credit card. Now, all of us have had emergencies, car breaks down, family member loses a job, we're helping out, medical emergencies. These will put stress on our debt and our savings, okay? But what the credit scores are looking at is your long-term history. How are you treating things? What's going on with them, okay? So even if you do not need a long-term credit card, let's say you opened a Macy's account, or major credit cards will give you the highest scores, but use them once a year to keep them active. So I have this little revolving system where I will, like every 6 months, just take the couple of cards out of my wallet that I keep in there, throw them in the drawer, grab a couple of new ones, because I do not want to lose my, as Charles mentioned, I'm a little older, that longer history. Okay, the longer you have a card and you keep that history going, even if you've had problems with it in the past. The longer you have it, the stronger your credit score will be. That's why younger kids have a tougher time getting their scores up. So treat credit as a type of game, if that makes sense. In order for you to win, for you to come out ahead, you play their game, all right? Use the credit card to get the points, to make your purchases, but use it for the expenses so I keep 2 cards in my wallet. One is the ones I know I'm going to be able to pay off at the end of every month, and then the other one is for things that I don't quite have the cash to pay that off. I know I'm going to have to carry a little balance for a month or 2 if I use this card. So it kind of is my budget. So my main card is my groceries, my gas, my lunch expenses, whatever my regular everyday expenses are. Then I know I will be paying off in full at the end of every month so that I can earn those points. And so I'm not paying the ridiculously high interest rates that cards are issuing. And especially if you've experienced a late payment or a missed payment, they are jacking those interest rates above 30% in some instances, which is insane. Okay? So use the cards, okay? You want to have a minimum of 3 major credit cards to build credit. One of the challenges is that not everyone was raised in a credit-using society. We have a lot of people that were taught cash is king. I just want to pay it with cash and not have any debt. Unfortunately, that doesn't give car lenders, home lenders, credit card companies any indication of how you pay bills because there's no record of it anywhere. And we are very much a society that loves paper trails, and lending itself is very much that way. So establishing credit is no longer as quick as it used to be. They want to see use of a card for over 6 months before you will even see any positive reflection on your credit report. If you do not have any credit cards, getting one to begin with can be challenging. You might have to do what's called a secured credit card, where you are putting some money into a savings account with that bank and or institution, so they will you give them $500, they give you a $500 credit card to start using. And you don't want to go and max out that credit card day one. You want to use it and pay it off, use it and pay it off, okay? Once you've built your credit score and you can start getting credit card offers from other companies that are not secured, then you're moving on to that next level. That is also a way to rebuild credit if you've had some problems in the past. Definitely don't max out new accounts. So if you have a big purchase that's coming up, something that you cannot avoid, try and use one of the older established cards to do that charge. When you max out brand new cards, your score will take a heavier hit than if you put that same transaction amount on an older established credit card. Prepaid cards, ATM cards, do not build your credit score. I see so many people now that think their debit card, because it says MasterCard and Visa, is a MasterCard and Visa. It is not. You get no credit history from those purchases. And they get taken out of your checking account the same day, the same minute, where if you put them on a credit card and you are using the card, not letting it use you, you got a 30-day float on your money. Your money's sitting in, even if the savings account is only earning 1%, 2%, that's 1 or 2% you're earning while you're using their money for free for 30 days, if you're paying it off at the end of every month, okay? Consider the timing before you apply for a card. If you're going to be shopping for something major, automobile, house, you will see a lowering of your credit score when you apply for new cards. You will see that anywhere between 5 and 15 points, depending upon where your score is. The unfair thing is the lower your credit score, the bigger the point hit when you apply for new credit. The higher your credit score, they're like, oh, well, they can manage credit. We're not as nervous when they do an inquiry to apply for new credit. Who looks at credit scores? Everyone, okay? Landlords, you know, they are definitely looking at, do you have any collection issues? The biggest one I will tell you as a landlord I look for is, do you have a collection account with a prior landlord? Because if you're not paying your rent, that is one of the biggest indicators that you certainly can't afford any other debt, because we all know that's the first one we pay. We're worried about our shelter, having that roof over our head, okay? Employers, if you're going, I don't know how many government jobs we're applying for right now, but if you're going for a government job, anything with a security clearance, your credit is fundamental for getting that job, keeping a security clearance so that you can earn more. Auto loans and home loans, we talked about. Credit card companies and student loan companies. So sometimes you're applying for a student loan for yourself, sometimes for a child. And the lower your score, the more expensive it is for you to borrow money. So one of the reasons I love to talk about the game of credit, and if you look at it as a game, again, it is a serious game, but if you look at it as, if I play by the rules and I manage to take advantage of the system instead of the system taking advantage of me by charging me those 29, 30% fees, then I win. You know, I grew up in the board game era, sorry. So I treat it like board games. And what you want to do is always take advantage of someone else's money for a float period whenever you can. The way you win is by lower interest rates, more options, especially in home loans. When you are purchasing a home, the options are so much more the higher your credit score. When you get to the lower end of the credit score range, you sometimes only have one option. It's like, this is the only thing we can do for you. Does that work? Versus the higher your credit score, you have options of down payment assistance programs, student loan payoff programs, grant programs. The options are unlimited, and you get to choose what's best for you versus, sorry, this is all I've got. Take it or leave it. The same thing with auto loans. You know, you get to do that 0.99 financing even in a higher interest rate market when you're purchasing versus when your credit score is more challenged and they're charging you 12 and 14 and 16% for an auto loan, which autos are expensive enough. We do not need to add to it with additional fees. How your credit score is calculated. I do get a lot of questions on this because they're like, well, I pay everything on time. I don't understand why I can't get to those 700 numbers that everybody talks about are so amazing. All right, what is going on? Well, here is the guide, all right? Payment history is the biggest chunk. Are you paying them on time? I will tell you, again, old era, there were times when I would FedEx my credit card statement in, my payment, so it would not hit that 30-day late. I didn't make it in that, first when it was due, but I paid extra to get it there on time, so it would not be a 30-day late. Yes, you may have already been charged a late fee, but you do whatever you can. And nowadays, you can just go on their website and have it count that same day. So no matter what, don't let something go late that's $20 or $30 a month or $50 a month. It is just so important. You do what, and this is where, instead of using your debit card for your everyday purchases, where your checking account is now at a zero balance when the payment is due, or $50 balance and you need $60 for the payment, if you would use the credit for that 30-day float, you would have the ability, you'd still have money in your checking account to make that payment, all right? So that float can be very important because a lot of us, depending upon when we get paid and when bills are due, they're not super flexible on when they want their money. And your paycheck only comes in at certain times of the month. So that float can be, the goal is to get you past needing that float period and that you're just taking advantage of it for the points, to buy things, to travel for free, to take advantage of those. But that is so important, the payment history. Current credit card balances is the next section for credit scores. I like to use the analogy of I have 4 credit cards with $1,000 high credit limit each, and I owe $1,000 on each card. The old adage used to be pay one off, close it, okay? But what the credit bureaus see is I have 4 credit cards at $1,000 balance, 1,000 high credit. I am maxed out. I'm at 100% of my usage, right? So if I pay one off and close it, and I now have 3 cards that I owe $3,000 to, I'm still at 100% usage, okay? Whereas if I paid that one card down and I now have $1,000 of available credit, okay, now I'm at 75% of my usage, which is still not great, but I now have some room. The goal is never charge more than 50% of the high credit limit when you are in the credit score building mode. If you can keep each of those cards at 500 or below, ideally don't have 4 cards with balances, but again, we got to start somewhere. The goal is let's get on top of our credit. Let's take advantage of it. Let's use what we need to. And then the length of credit history. If we're younger, there's no way we can work on that. You know, we're just out of college, we're just getting our first job, our cards are all going to be new. But as we get older, do not close those cards you've had for 10 years, 15 years, 5 years. It's so important to have those long-term cards, okay? The type of credit. Major credit cards, MasterCards, Visa, Discover, American Express. Those are the cards that give you the highest score points. You do not get the highest points from the Macy's card, the Sears card, the JCPenney's, your Amazon card, okay? It has to be a major credit card for you to get the biggest bump. Don't close those store cards if you've got them, but try also, if you're using them because they're offering rewards or whatever your incentive is to use them, again, make sure they're being paid off at the end of each month, because those cards have even a higher interest rate than your primary cards, your big cards. The last thing is new credit. 10% of the score is on new credit. So again, if you're opening a lot of new cards, they're going to see that as a slight risk. They see it as an indication towards bankruptcy when you're opening too many cards at one time. Are they getting ready to charge a bunch of cards and then ditch us all and say, hasta la vista? So, major credit cards, the higher your score, the better you are. Then you also get to a point where the cards compete for your business. Okay, so you don't want to have all your cards with one bank. You don't want to have them all with Chase or Bank of America or Citibank or, you know, Capital One, whatever your preference is. You want to have one with each of them, because when you have no balance and a good score, they're going to send you, oh, use our card for your next 12 months purchases and we will have 0% interest for you. Oh, okay, well then I can afford that big purchase I have coming up, because if I can allocate it for 12 months or 18 months, 0% interest, then, okay, that new laptop I need to buy for myself, for my kids, you know, I can afford to pay that $500 or $800 fee off in 12 months with 0% interest, because I'm still paying only $500 or $800 for that laptop, not $1,200 with all the interest, okay? No questions yet? You guys are good. All right, the myth about disputing your credit. This is a favorite of mine. So, oh, that's okay, I disputed that. That'll be taken care of. So here's what happens when you dispute something with a creditor. You may see a temporary increase in your credit score because the creditor has 30 days to respond to that dispute, and they don't always get back to it in 30 days. So the credit bureaus will temporarily take that off your score, and then the next month, the creditor responds and says, no, they do owe me that money. I don't care what they say. And now you've got a dispute listed on there, but you've still got the negative item. Doing it directly with the credit bureaus is a waste of time. If you go to do something with a lender, we're going to make you remove the dispute. Your score is going to go right back to where it was. You have to deal with the creditor directly. You have a dispute, and the sooner you deal with the dispute, the more likely you are to get it resolved. If you wait 5 years to deal with something, you don't have the records. Your memory's shoddy. They have all the records, okay? If you have a legitimate dispute, you have to reach out to them. And don't get emotional, okay? When we call and we're emotional, the person on the other end gets their back up. They get insulted, even though, again, they should not be taking it personally. It's just their job to answer the phone and understand your problem. I always tell my clients, we all know when we're talking to someone that's listening and open to hearing what's going on, and when we get someone on the other end that we're like, they could care less. They are not listening to me, they're having a bad day, maybe they got in an accident on the way to work, maybe they broke up with their best friend or their significant other. They are not having a good day. Trying to convince this person to help you is a waste of your time. Hang up, dial the phone, get the new person, okay? We all know the difference between when someone is willing to talk to us and they're like, uh-huh. And you're like, well, that person's really understanding. So again, hang up. Start with someone new. Get someone who's willing to listen to you and say, listen, this is what happened. Yes, I did buy this, but I ended up returning it. I'm not sure why it's not showing up, or I was given a discount, but the discount's not reflecting. And no matter what, whatever they agree to do, you need it in writing. Have them fax it to you, email it to you while you're on the phone. And so many of them will be, well, we can't do that. Yes, they can. You just have to remain firm and say, listen. And I like to, even if you're not doing a home loan or auto loan, say, listen, I'm applying for this loan and they need the verification. Put it on someone else. They require something in writing. What can you get me? And so let's say you get the letter from them saying, I'm removing that late, you're right. Or sometimes, so this is the other thing. If you have good credit and you call them and say, hey, I've never been late with you before, I don't know what happened, why you didn't get the payment on time, I've got that it went out of my account at this point, they will remove it as a courtesy because they look at your credit while they're talking to you. Now, if they see you've got lates with 15 other accounts, they're like, yeah, versus they're like, oh, I do see this person's never had any lates. I don't see any issues. As a courtesy, let me remove that. No problem, we've taken care of it. Okay? Because again, life does happen. We do forget things. So that's another benefit of building your credit into a strong, is when you do have one event that you slipped, they're more likely to believe you and fix it for you. All right. Now, yes, the temporary fix doesn't fix the problem. We're going to require you to remove the dispute. If it is real, if it is fraud, which is the scariest thing these days because there is so much stuff out there, you will be required to do a police report to prove that it really is an issue. It's not just something you think is an issue, okay? Contact the credit card company. If you wait more than 60 days, so if you wait more than 2 months, they're like, you had 2 months to contact us. What took you so long? Now, if you can legitimately prove, hey, I was in the hospital, I was out of the country, then they might be likely to extend that time frame. But basically, you have 60 days from which time to verify and reach out and say, there's a problem. Now, I am not quite as organized as my father, who taught me to save my receipts at the end of every month, take my receipts and compare them to the credit card statement. I wish I was that organized. I am not. But I do read through them every month. And I'm going, yeah, I bought gas, yeah. And then you will see that weird name on there that you're like, I don't know what the heck is this one? And I will pick up the phone and call the creditor and go, hey, can you just tell me what is this ABC Distributing? That name doesn't ring any bells with me. And then they'll be like, oh, that's the name for this store. And I'm like, oh, okay, yes, I was at that store. I did buy something. And they're like, no problem. They don't have any problem with you calling when you don't recognize a name on there. Because some creditors do put it under a different name. And believe it or not, they see these notes in the system when you call to check on something, which means that they know you're paying attention. And, like I said, 90% of the time it is your charge. It's just under a name you didn't recognize. But please check it, because there is that time when it's not yours. And we've all had the circumstance where the creditor put a charge through twice for the same item. It's like, no, I only bought one. I didn't buy two. So the longer you take to clear it up, the more difficult it is. Again, when you wait years, because I do have a lot of people that are like, and there is no one that I've ever met that isn't good at avoiding confrontation. We don't want to call and argue with someone. We don't want to have to deal with a problem. I'd rather just ignore it and let it go away, which we know it doesn't usually work that way, okay? You have to deal with it as soon as possible. Removing a dispute. There is a formal letter that you send to the creditor itself, okay, to file a dispute the correct way versus sending it to the credit bureaus. So occasionally, the creditor may be out of business. There are companies that go out of business, and there is no way to reach out to them to get something fixed. There are instances when someone else has gotten a hold of your information. I've been in the middle of a loan, and, I call my client and say, you just applied for something in Texas. Were you visiting? And they're like, no, wasn't in Texas. What's going on? They then have to contact the creditors and find out why credit is being opened under their name, okay? So in Maryland, you're allowed one free credit report a year from each bureau by law. So I hope you know that as well. This is the formal removing a dispute letter. If you need a copy or a PDF or Word document, I can get it to the pastor if anybody needs to work with that. There is a formal way. And why do I want my credit scores better? Okay. So again, I am a home lender, have been for a long time. So for me, a lot of this is tied into buying a home, okay? So what I wanted to share with you is the types of loans that are available and the difference between those options we were talking about for credit and what is available for credit. Did you have a question, Gail?
My question was, when you look at your credit report and all three bureaus are reporting you owe $6,500 to Bank of America, and one is reporting you owe $4,500 to Bank of America, and the other one is reporting $2,500. Somebody's wrong, So how do you get that cleared up?
So is this an open account or a closed account?
Open.
So with an open account, remember I mentioned that they all report at different times? And they can all have different balances on it. They will not update until they update with their normal systems. Now, if you are going through a home loan process and we have a statement that shows a new balance, we can do something called a rapid update, a rapid rescore within our system, okay? However, getting credit bureaus to do something that is outside their norm is slim and none. That's unfortunately. So they are much slower to report new balances that are lower than, again, if you went out and bought something this afternoon, that higher balance will click on there by the time you leave the store. So on a closed account, let's say when you closed it, I'm going to do two scenarios with the closed account, okay? One is you just closed the credit card and you're paying it off as you normally would, okay? Your regular monthly payment. That should be pretty accurate because they're getting the balances. The difference is, let's say you have a closed account that went to collection. They will not update the balance until it's zero. So you may have started out owing $6,000. and you've already paid $5,500, it is still going to show as $6,000. And a lot of times, even when you're at zero, again, they got their money, the account's closed, you need to ask for a letter proving that it's a zero balance and send it to each credit bureau. It's on you, which is unfair.
Okay, I'm sorry to ask all these questions. So the other question would be, if you close, well, not really close the account, if you settle with a creditor for a certain amount, but they're going to constantly report you as late every month, is that?
So what I think I'm hearing her ask is, your account has been closed, it maybe went to collection. No, still open? Okay. So, yes. So you are doing, let's say, a consumer credit counseling kind of service or something like that, where they agreed to take $40 a month, but the minimum payment was $80. In that, sometimes they have a sign your contract, sometimes they don't. It states in there, we are allowed to report you late because we are accepting less than the minimum payment. In that case, believe it or not, it is actually better, if the account is closed, to let it go to collection so the lates stop and it just goes to collection and you make that lower payment. Because otherwise, yes, they see 25 late payments and it ends up 90, 120. It actually, sadly enough, because you're being responsible in paying that debt, you would think it would be the exact opposite, that you get a little bonus for, hey, I didn't let it go to collection. I'm being responsible. My budget just doesn't allow right now. I lost my job, or I had to take a lower job, or whatever the issue is. It is actually better to let it go to collection and then make the payment arrangement, because your score doesn't take as big of a hit. Sad but true. Any other questions on the disputes dealing with past dues? We're good? Okay. All right, so let's talk about the loan choices we have that, when home buying, are affected by our credit score. So there are two main choices of home loans. There is government lending, which is FHA, the Federal Housing Administration. There is VA, the Veterans Administration, if you served our country. And there is USDA, which is the rural lending. They allow lower credit scores, traditionally down to 580 to 620. They will go lower with exceptions allowed. You have good cash reserves, good job stability, your rent is similar to your mortgage payment, things like that are considered compensating factors. The interest rates are reasonable. They're not terrible. What I dislike about the government programs is you're paying what's called an upfront mortgage insurance premium of 1.75% on FHA. VA is between 2.2 to 3.3% on top of your sales price, okay? And USDA does not have a funding fee. You're paying into an insurance policy because they are known to lend to higher risk creditors, or debtors rather, yourself. So because they are lending to lower credit score borrowers, you're all paying into this insurance fund so that if someone goes late or defaults, that insurance policy is paying that risk. So a wonderful option to get you into a home, but there is a cost to it that is added to your loan. Some of these terms you see, like HOC is a down payment assistance program in Montgomery County. CDA is one in Maryland. So first-time home buyers have a beautiful option for down payment assistance, for grants. The higher your credit score, the more options you have available to you again. In Maryland, the Maryland Mortgage Program gives up to 6% down payment assistance. They have a program that pays off student loan debt when you buy a house. They have a program for home accessibility if you have a need for that. Amazing options. The lower your score gets, the less options you have. And so that's why I provided this slide. It's just basically so you can understand that the stronger that credit, again, that game of life, play the game, the higher your score, the more likely you are to win at the end. They seek you and give you money versus you wanting them. Okay. Again, how my credit score determines my loan choices. FHA does go down to, like I said, a 500 score. A lot of times they're going to require more down payment or that you have some cash reserves. This is what I was discussing. You do have low down payment options with both. So the second option besides government is conventional lending. Some of you may have heard of this when we had the issues with Fannie Mae and Freddie Mac going into conservatorship when they were having financial problems. Conventional loans are like a stock. They're actually a treasury bond, but it's like something you're investing in. There are many of your 401ks, your 403bs, your TSPs are investing in mortgage-backed securities, somebody else's mortgage. Your retirement is based on people that are getting home loans, and you're investing in that. So again, for your retirement, you'd like to know that your retirement is investing in people that are paying the mortgage back, right? So again, the higher that score, the better off you know that that money's getting repaid, so your investment is safer. So this is just giving you, again, low down payment. The government programs are as low as 0 with USDA, 0 with veterans, 3.5% with our federal housing, with FHA. The cons are those upfront fees that they add to your loan. So you buy a house for $300,000, you're actually financing more than $300,000, so you're upside down in the beginning, especially if you're combining it with that fee that they charge in addition to a down payment assistance program. So a lot of times when you're buying a home for the first time, you're financing like 105% of your sales price if you're getting a down payment assistance loan. So there won't be equity for a little bit, but the most important part is you've stopped paying your landlord. Conventional loans, that Fannie and Freddie, do require a 3% down payment, a little bit lower than FHA, but they want those higher credit scores. Now, mortgage insurance is something that was designed so that if you, when our parents were buying, you had to have 20% down to buy a house. With the higher costs that we live in, getting to a 20% down payment is near impossible unless you roll into some money, which most of us do not. So the insurance companies came up with something called mortgage insurance that said, okay, Mr. Lender, if you're willing to give this borrower a loan with only 3% down, we will give you an insurance policy. Like when you buy a car, you have gap coverage in case you crash it the day after you buy it and it's no longer worth what you pay. It's like a gap coverage for the lender. It's the difference between that 80%, if you were putting that 20% down, and the 97% they're actually giving you. So that 3% down payment, okay, that gap between 3% down and 20% down is the insurance policy that you're paying for monthly so that the lender feels comfortable giving you that money. Lower your credit score is, the lower the premium is. So if any of you been affected by have a lower credit score, so now your car insurance is higher, I've seen some people say that they've gotten a bump when their credit score dipped. So be aware that insurance companies are starting to look at credit scores too when they're issuing, okay? Pros, low down payments. Cons, higher credit score is required to do conventional lending. So again, the goal of credit is to make your life easier, to give you more options when you're out there and you need financing. It is the ability to have options when we're in trouble. We've all been in a circumstance when financially we just didn't have it, and we were struggling, and maybe for a reason, we didn't have, maybe we got laid off on our job, maybe we were out of work for maternity leave, and we weren't paid for it. We've all hit times when we needed money, and have you noticed that when you need it, it's harder to get it? Yeah, that's when people are like, yeah, you need the money. We don't want to give it to you. But when things are going great, they're like sending you, oh, we'll give you this credit card and this. So that's why I tell people, especially clients that I work with, I'm like, call me before you get into the missed credit card payment. Call me, let's talk about, because once you are needy, they get nervous, It's when you don't need it that they're happy to give you credit. And that's why I tell people it's so important to have the ability to use credit for emergencies, because life throws us emergencies all the time, all right? Whether it's our personal emergency, a family member's, a friend, and when you have credit, you have the ability to get past it. It may still be stressful, but knowing that you can still pay rent, you can still pay your mortgage, you can still pay your car payment, even if you see that debt starting to trickle up. But you have the ability versus, I don't know where my next mortgage payment is coming from. I have kids to feed. I don't know where I'm going to be able to put the food on the table, how I'm going to do that. So using it, taking advantage of the ability to get credit out there, to me is such a great tool in our life. And since we are nothing but a credit score to people, we are no longer known by our banker, we are no longer known by our creditors because they're a large institution that works out of, some other place. They're not our local banker anymore. They're not someone who knows us when we walk in the door. So that ability to be a number that they like, so they're willing to help you, is so important. Top 3 things to do to increase your credit score. I kind of talked about this in the beginning, so we're going to circle back to it. Try and keep those credit card balances to 30 or 50% of your high credit limit. Again, it's a goal. It doesn't have to happen overnight. It's a goal. Pay off past due balances. Something went to collection. Sometimes they will report a zero owed, and sometimes they will still report that balance owed. And as we were talking about earlier, if you're making payments on it, it's still not going to change until it's a zero. And a lot of times they don't rush to put that zero up there. It can be a year still reporting that balance. So you have to take advantage, pull that free credit report, see, is it reporting a zero to all 3 bureaus? Okay? Verify it. Don't trust the credit bureaus to take care of you. You got to take care of yourself. Pay your monthly bills on time. And again, 29 days late is not late to the credit bureaus. So again, you may have been hit with that late fee, but if it was due on the 15th, try not to let it roll to the 15th of the next month. Do whatever you can to pay it by the 14th, the 13th, so that you're before that 30-day cutoff period, okay? I'm a big proponent, again, old school, sorry. My credit card bills are mailed to me. I do not allow them to go into my email because I get too many emails, and I will miss it. If I do not see the statement come in my mailbox, I will forget. Now, I will tell you, I do have auto debit for the minimum payment set up on every credit card. So that if for some reason I'm out of town, there's an emergency, something happens, and I miss that due date, I at least got the minimum payment in. Well, unfortunately, my penalty is I'm now paying interest on whatever that balance was. But I'm avoiding the $30, the $40, the $50 late fee that they now charge, plus them bouncing my interest rate up, potentially because I missed a payment. So I will not set it up to pay the whole balance every month because, again, I may not have that in my checking account every month. But I do know that that minimum payment, that $30, that $50, that $80, whatever it will be, I do have that in there. So I do encourage you to set up auto payment for the minimum payment. So again, it's set it and forget it. If for some chance you missed getting the whole balance paid, you at least got the minimum payment done, right? 6 ways to build good credit. Okay, I've been talking a lot, but I'm gonna keep going. All right, only borrow what you can afford. I know that's a hard concept, especially in social media. Man, that TikTok gets me every time with, oh, buy this little gizmo that does this and saves you time and effort. So I will also tell you, one of my secrets with online shopping is I put it in the cart and I wait a day. So if I don't care about it the next day, then they didn't get me on impulse buying, okay? So I will put it in that cart, and if I'm not excited about it the next day, then I don't buy it. Because again, you're listening to that sales pitch and it sounds so good, and oh, I could really use this fancy grater thing instead of hand grating something. So that is a tool I personally use, is put it in the cart, and if you don't remember to come back the next day, then it wasn't that important, right? All right. Use only a small amount of the credit you have available. Try not to max everything out. Start with only one credit card if you're trying to pay things down, okay? The sooner you get that down to a 0. So again, we'll go back to, you have 4 credit cards, they're at $1,000 each. The minimum payment is $30 a month on each. When you get rid of one, you've now got an extra $30 a month that you can double down and start paying $60 a month on one of those cards to get that down. And then when you save that $30 a month, you now have $90 a month to work on that third card. Now, it doesn't always work that way. Sometimes that extra $30 has to go to another expense. But the goal is get rid of debt. Pay your credit card balance in full monthly. Again, I have to use 2 cards because sometimes there's some expenses that I know are not going to get paid off in full every month. And because I have stronger credit, use that system of, okay, here's 0% for 12 months if you use this card. So that second card gets rotated on who's offering me what that month for that emergency. Let your accounts age like a fine wine. Don't close the older accounts. Keep them open. Be aware that if you do not use a card for 12 months, the creditor can close you for inactivity. So again, if you've started to build that credit and you've got 3 or 4 cards, rotate them out so that you're using them and you keep them active. And that helps build your credit score as well. This is also telling you where you can get your free credit reports. And I know Pastor Charles has this information if you need it. Debt consolidation companies. The bane of my existence, and the credit repair companies. Been lending for 34 years, have never seen one that works, not one, okay? I get solicited by them all the time. Refer your clients to me, refer your clients to me. And I tell every single one of them, you give me one for free and prove to me that you're going to fix my client's credit, and I will happily refer you to every delinquent client I have. 34 years, never gotten it once, okay? They can work temporarily, okay? It is, if you're on the verge of bankruptcy, it is an alternative to bankruptcy. Sometimes there's no option. The money's just not there. I'm out of work, I'm retired, a big debt occurred. There are times when you just don't have it, okay? But for the most part, if at all humanly possible, do not use these services. They charge you a fee. I have a client who recently went into one of these services, and the wife had called me because they were in financial trouble and needed to get a second mortgage. And as soon as we pulled the credit, she wasn't aware that he had started this with a couple of his credit cards. And he was just told that, instead of making a $1,000 a month payment, I can now make a $650 a month payment to pay these off for the less than amount. When you read the contract, yes, the creditor has accepted less money, because the debt repair company gets the other portion of the money. So you're still paying the same debt, just now splitting it between the creditor who's reporting you as late every month because you're not paying the minimum amount, even though you've agreed to a lower amount, and the agency is getting the difference between, I think it was, it was like an 18% fee off the amount you originally put into the service. So I am very anti using these credit repair companies. That's my personal opinion. Someone may have a better experience, I just don't. So I'd rather you reach out to the pastor, to myself. If you're having financial problems and you need some advice, we will work with you on how to get to the next level. Everybody has hiccups. Don't ever be embarrassed about it. Just take advantage of the resources that you have. Just don't pay somebody to do it. Oh, this is my favorite. They're on the news, they're on TikTok, they're on Instagram. It's a federal debt relief program. It is not a federal debt relief program. If it doesn't say .org, it is not a federal program. If it does not say .gov. So this is, I actually used my client scenario. Obviously, I left out personal information, but he had $46,000 of debt that went into this service. Okay? The creditor received almost 30, 29.9 versus the 46. Okay? The credit agency got 11.7, almost 12. Okay? So his credit score went down 100 points for going into this, and he had been in this program 2 months when we pulled credit. Okay? Now, technically, he is paying $5,000 less in the total debt owed. Okay? So technically, there is a savings. Okay? However, my credit score is not worth the $5,000 that it will take me years to get my credit score back up another 100 points. And I will pay more than $5,000 in interest on everything I'm doing in those years until I get to that point. So I just wanted to share a real life example with you of someone, like I said, that I actually had the contract in front of me that I could pull it and read it and go, because we've all been tempted, you know? Oh, if you have more than $20,000 in credit card debt, you're eligible for this federal relief program. Call us. The federal government is going to relieve your debt. It's not. Okay. So my credit score doesn't meet the minimum to buy a car, to buy a house. What do I do? Okay? You work with someone who can actually advise you. Now, most lenders have score simulators, again, because everything's done by a computer now. It's all these fancy algorithms and things that are, again, way above my pay grade to explain to you. But we have the ability to say, okay, their score is a 622, and we need to get to a 640 for their down payment assistance programs. What do we have to do to get to that? They will give us a line-by-line item within 30 days of what you need to do to get your score to the next level. Now, that's assuming you have credit. If you have closed everything and have no credit, the only way to build it is to open new credit. So now you're on a longer haul because it takes 6 months before you'll even start to see any score bump from new credit. Now, one of the great things about low credit scores is it is a lot faster to move you up when you're at 550, 580, and we're fixing things than if you're at 720 and you're trying to get to 740. So the lower you are, the faster it is to get you up, believe it or not, with just a few fixes, paying off some balances, establishing some new patterns. So don't get discouraged if you've got some challenges to work with. Okay? And then that's me. So how are we doing on time? 11:50. Do we have the ability? Yes. Please. Yes.
I I want to use for example, I want to use my UX Bank card to get groceries, to give my wife and I that extra wiggle room because things are more expensive.
Yes.
But how do I stop that $250 or $300 being committed to that card every month? Now it's locked in, so I can pay that balance off before the next month. You understand what I mean? It's like I don't want to get stuck into some kind of cycle where that extra cash is locked on that card specifically for groceries. Does that make sense? How do I stop that?
So right now you're charging your groceries every month, and there's a balance rolling over. Is that correct?
No, so I'm paying it off,
Yes.
but I don't want that money stuck to just paying off that card. I feel like I'm better off just using cash.
Which you are not.
I am. I stopped.
Yes.
I stopped.
So it's a budget plan, okay? Just like we do when we have cash and we're checking out, we want to watch our groceries, as you're adding into the cart. Okay, now I'm at $23, and I'm at $32, now I'm at $48. Now, if you are uncomfortable with the balance even sitting on your card for 30 days, you can make the payment as soon as you go home. Okay, so you just charged $250 in groceries. You can go home and put that $250 out of your checking account to the credit card that night if you want to. You still get the benefit of having charged on it. You still get any points or reward fees that they offer. And to your mind, you still paid cash. Does that help? Excellent. And thank you for asking that question. Do we have the ability for any of the online people to type in questions? Okay. So, trying to think if there's anything else about credit I can share with you. I know it's not the most exciting topic, but it has gotten me through some so I will share with you that when I was going to college, I was not eligible for any student loans. Now, luckily, the era I was going in, the 80s, was an era where you could pay your MasterCard with your Visa. So I literally was paying for my college education on credit cards. And towards the end, I literally was doing the balance transfers where I'd write Visa the MasterCard check and MasterCard the Visa check and American Express. And when I got out of college, I had a lot of credit card debt because I was paying my college that way. If I hadn't had the good credit I did, I would not have had the ability to go to college for me. Again, that's not the best way to do it, but it was an option that got me through. And when I got out, thankfully, boy, did it feel so good when even that first credit card was paid off. And you start working on the weight that debt puts on your shoulders when you don't want to go pay bills, not because you don't have money to pay bills, but you don't have enough to pay them all, is heavy and stressful. So once you can take hold of that and just go, okay, I know I have some issues, and I have to sit down in front of my phone, in front of my computer, and figure out how I'm going to get to the next. I can't keep avoiding it. I have to write down everything I owe. What is the interest rate? I need to put it on paper, not one statement, okay, and look at it. Do we have a question, Charles?
Got a question for you, coming from one of our viewers on Facebook. It says, is it true that the apartment credit check, they have their own credit checking company? If yes, what is the name of the company most apartment rentals use, and can a consumer access it?
So they do not all use the same one. I use TransUnion SmartMove, and there are several similar ones like it. You as a consumer can absolutely go in and order the same credit background check that we get. DC has now made it illegal to do a background check when you're applying for rent. But the background check is telling us, even if you have parking tickets, it's very interesting. But yes, as a consumer, you can absolutely log in, create an account, and pull it so you can see exactly what they're going to see.
There's another question for you. This comes from the pastor of the church. Talk a little bit about trying to manage interest rates on credit cards. Like, if you have one that's better than the other one, how do you manage that? Like,
Okay.
Kind of looking and like, I want to get this credit because the interest rate's cheaper. I'll transfer balances to that one, or I'll get this one in. Talk a little bit about that strategy.
Yes. So one of the things when I talked about writing down all your debt and the amount you owed is, I think I mentioned interest rate. I want to mark what my interest rate is on each one. So I definitely want to try and target the highest interest rate card first. Okay. Now, if I have balance transfer offers, again, if you have better credit, you're going to have a lower transfer fee option. What you have to pay attention to is there is a fee to transfer that balance. Even if you're getting a 0% interest rate, okay, for 12 months, 18 months, there's a 3% fee or a 5% fee, okay? So if you owe $1,000, they're going to charge you 3% or 5%, so you're adding to that debt already to transfer it. So you want to make sure the savings over the 12 months is going to at least equal, it usually does, it usually is more, okay, if you're going to have to carry the balance. But that is the game of having open available credit. So you can do a balance transfer. Now the other option is, let me do one more third option, is you will have cards that offer it to you on new purchases. So you go, okay, all my new purchases are going to go on this card that's offering 0% for 12 months so that I can take that savings and aggressively go after this card that has a higher interest rate. Next question.
The other question I have is, while we're trying to get people to get out of debt and eliminate debt, I just want you to kind of convey that this is not about you racking up debt, but it's about how to manage credit in a way that continues to help you to position you for bigger acquisitions or things you need and that you can handle.
Oh, absolutely. I hope I did not give the indicator that I want you to get in massive debt.
I'm not saying you're saying that. I just want to just kind of reiterate that.
So, with the cost of things in our world, we will rarely be able to pay for everything in cash that we need. It never, or want. Yes, we do have wants that we can reward ourselves with. Yes, let's agree with that. So you have, it never fails. As soon as your car payment is almost over, it starts to clink and chunk and ding and needs new tires and, oh, for God's sakes, I was going to have no car payment and I was, finally going to have that extra $300-500 to put towards something else. The goal is to live within our means. It is very difficult in a social media world where we see people in these large luxury homes and cars and wearing designer clothes and, $5,000 purses and, you can have those dreams. No one is saying you can't. But if your income is one number and you are not in a career where that number will greatly change over the decades, there is no shame in living within your means. The more you stay within your means, the more that stress of competing with the world, keeping up with the Joneses, trying to match what they're doing, match the jewelry, match the car, match the house. That does not make you happy. When you go home at night, you are still not happy. You want to have a reasonable car payment, have a reasonable housing payment, And the goal of being debt-free is also to have extra cash in the bank so that you can invest in retirement accounts, homes for your future, investment properties to create income. I was sharing with the pastor that I was at an event recently where the 24-year-old daughter of this gentleman, at 16, he gave her the book, Rich Man, Poor Man, and she is 24, this beautiful African-American woman, and she has a $34 million portfolio of hotels, real estate, and because her dad had owned property and shared with her that you want to own and be a landlord. You do not want to be someone's tenant. And so from a young age, he tutored her on the importance of leveraging other people's money to invest and the importance of having good credit so that you can get those loans from, whether it's a small business loan, if you're opening your own business, whether it's being a partner in buying a hotel, buying an apartment complex. I know the term generational wealth is thrown around a lot, but we typically learn by example. And if we haven't had that example in the past, it's up to us to educate ourselves to get to that next level. And one of the reasons I've been doing what I have for so long is it makes me, I was raised by a single mom. Money was very tight. I love helping single moms. I love helping first-time home buyers. I love, one of my favorite Facebook posts was, he was like 68 years old and he was a first-time home buyer and we were sharing his story and everybody was like, oh my God, yes. So it is never too late to get your dream, to create that example for the next generation and grow. Does that help? Okay. Yes.
Can you explain what a debt cycle is and how to break out of it?
So a debt cycle is pretty much where you're living paycheck to paycheck. I will see, so when I do a loan, I see your bank statements. I will see the payday loans every day in there. And the cost of a payday loan is taking some of your money to get that money sooner so you have it to pay debts. So you're caught in this endless cycle of, I cannot get ahead. I am stuck with every debt every month is just siphoning off every penny I have, and there's no wiggle room. So there comes a point where you have to sit down. Again, you have to look at those debts, and you have to look at what's coming in on your paycheck. And a change has to be made. Sometimes that change may be, I have to let one debt go so that I have enough to catch up and attack this cycle. Sometimes it's, I have to let my 401k withdrawal go for a year so that I have a little bit of extra cash to attack this debt. I have to give up my apartment and move in with my family and take 6 months or a year to get back on my feet. I have to be willing to ask for help to get to the next level. Does that, okay, thank you. That's a beautiful question, thank you. How are we doing on time, Charles? We wrapping up?
Yep.
Okay.
Yeah. Anybody else have any questions? Let me see if anything else is on Facebook. Hold on just a second.
No problem.
I think we're pretty good on that, I think. I do want to just comment and reemphasize this whole idea of budgeting and strategy, that people are really good at budgeting and coming up with a good plan, a debt elimination plan.
And there's so many tools online for budgets now.
Yeah.
They're amazing.
And getting good financial counseling from people too that are experts.
Yes.
To help them, and those things are really good. Just trying to look here to see. I don't think we have any more right now.
And thank you guys for coming out and for listening online. Again, not the most exciting topic, but boy, can it change your life.
Yeah. think I got one more here. Let me see.
No problem.
You stated earlier to review your credit monthly report. Would you recommend the same practice to review your checking and savings accounts to identify wasteful spending?
Yes. So one of the reasons I don't like the debit card right out of my checking account is because it doesn't make you as accountable as when you put it on a charge card or when you're paying with cash, okay? Sometimes especially with the little expenses that get out of control. You know, we stop for that mid-afternoon coffee, or we go to the vending machine mid-afternoon for a pick-me-up snack. When you start looking at those monthly expenditures and you go, really, I am spending $85 a month at the vending machine for chips and candy or cookies? I got to tell you, I'm one of those people who hates to order a salad at a restaurant because I'm like, $12 for lettuce? I'm like, I can't do it. But there are other areas I'll spend money on, but certain things like that, and I'm such a brown bagger when it comes to lunch. And number one, I like my own food better than I like a lot of other people's food. And I just choke over the cost of a sandwich or soup at the little prep manager on our street, which is like one of the only places left in. I work at Farragut Square, and all the restaurants are gone. We have no more food trucks that come since COVID. And so there's very few choices, and they are not inexpensive, the ones that are left. So yes, look at your statement. So again, you see the totals, but when you write down and you categorize them, okay, this is what I'm spending on groceries. This is what I'm spending on takeout food for the family. And I get that we get rushed, and we have a family to feed, and we're working a full-time job. Get the kids involved in meal prep. Make it a fun family activity. But yeah, the eating out, the outside expenditures do get out of control and you're just like, oh, it's just gonna be one more time, just one more time. Thank you, that's a good suggestion, Charles.
Yeah, I think the other thing I want to mention, and I know we got to end here, is I think one of the greatest things we all can do is kind of really increase our credit portfolio to the point where when we get to the place where we know how to save, know how to use credit properly, we'll be able to use credit to leverage for acquisitions of things that can give us wealth. So therefore, I can use it. I've heard people who are really good at this. They'll take a card that has, especially when they're up there, they got $20,000 card. They can invest in something that's going to give them much more money than the interest that's being charged against them on the credit card. So if I take $10,000 off a credit card and use it for something that's going to invest in or use that debt, but it's going to earn me a certain percentage back, I just made a whole bunch of money by using somebody else's money. I mean, that's what business people do all the time beyond just a credit card. Just they leverage debt to be able to use it to gain more wealth. So, we got to think about it that way than just always thinking about consuming too, right? So it's about knowing how to use debt the right way in which you're seeing it as an investment versus a liability.
I think that's a very good way to look at it. It's, take control of it. Don't let it control you.
Yeah.
Okay, that's really the big takeaway. Is it is an amazing tool to grow your own personal empire. Okay, so grab hold of it. It can be a little scary. It might buck you off a couple of times, but we all learn from mistakes. But there is never a mistake you can't get past. So, thank you again so much for having me, guys. Really
Very
appreciate
good.
it.
Give it a big hand for Tina Del Casale, all the way from Sandy Spring via Washington, D.C. I've talked to her dad before. Her dad is also a great guy. He does commercial lending. He's in California, right? Yeah, so he's a good guy. So thank you, guys. Thank you, Tina. God bless. Thank you, sir. Ma'am. She's good. She's good. So if you need any help, just let me know. Let a church know. Give us a call. Let us know. We'll try to help you any way we can. Let's pray. Thank you so much. Father, thank you for what we've experienced today. Thank you for Sandy, God, and thank you for Sandy Spring Bank, and thank you for Tina, God. Thank you for all that she shared today and the information that we've got. God, help us to be good, wise stewards and smart and recover. Thank you for being our Redeemer and Restorer, and it's never too late. And so, God, we have stories of young people, older people, who we've seen God just do tremendous things. And we've seen God redeem people, restore people, help us. But it takes wisdom, it takes discipline, and it takes patience. And it's not a quick, rich thing always getting us out. Some people want it quick, but it took a long time to get us in the mess, maybe some of us overnight. But God, we do know that you can bring us out. Sometimes it's little by little, and we see progression. We can celebrate that. Just like we pay one bill, one debt off, we can feel good, and we can keep going and build momentum. So God, give us a revolution, a change, a radical change of order of how we handle our finances and debt and our credit, so that, Lord, we can actually see it work for us to benefit us and to benefit our families and generations to come. We thank you and we bless you in Jesus' name. Amen. All right. Thank you, guys. Thank you all for hanging out today. All right. See you all tomorrow at church. International Day. International Day. That's right. Tomorrow's International Day. We got all the food. Everybody's bringing food, man. Jerk chicken, everything, man. We got everything going to be here tomorrow. All right. Have a good one.